Hello everyone and welcome to Trade Talks. My name is Yogesh. This is the month of July and it's time to welcome the earnings season. Earnings season is a period within a year usually lasting several weeks where majority of the listed companies announce their latest financial accounts. An earnings report consists of revenue, net income, earning per share and future outlook which provide investors an insight in regards to the current health and outlook for the company. As such, the earnings season helps the market participants to trade the company they are monitoring and the broader index depending on the impact the company has. For example, a strong Apple earnings report may see investors buying Dow Jones and Nasdaq futures. Now that being said, traders should track at least three things during the earnings season. 1. The earnings surprise. 2. The bellwether performance. And 3. The overall results versus the overall expectations. Earnings surprise is when the results are far better or worse than what analysts had expected. Positive or negative earnings surprise can have a profound impact on the performance of an individual stock and can often propel the given stock on the meaningful uptrend and downtrend. During the earnings season, the fundamental traders may pay attention to whether the majority of the earnings surprises are positive or negative. If a vast majority of surprises are positive, then it is generally considered as a sign that business is good and a bullish sign for the stock markets overall. A negative earnings surprise for a given company can devastate the price of that company's stock and potentially launch a downtrend that lasts for a few days or an extended period of time. When a host of companies experience these kind of negative events over a short few weeks, it can really spook the investing public, which can cause them to scale back their stock buying. This kind of reduction in the demand for the stock buying can weaken the stock markets in the interim. Some of the companies and industries are thought of as the bellwethers or the indicators of the health of the stock market and business activity overall. Throughout much of the 20th century, General Motors and IBM were typically viewed as the market bellwethers. If one of these companies stumbled, it was typically viewed as a troubling sign for the overall economy. In more recent years, Microsoft and Apple served this role, and other companies will inevitably follow suit. The bottom line is that if the companies that are thought of as leaders are performing well, then it's a good sign for the stock markets and by extension, the economy overall and vice versa. Anytime the bellwether stock earnings surprises or the results are below the expectations, it may serve as a warning to the traders that trouble may be ahead for the stock markets and for the economy overall. Many analysts at many financial firms spend a lot of time in estimating how well a company or an industry is likely to perform in terms of generating earnings and sales. As a result, there are so much inbuilt expectations among the investing public of how well the earnings are likely to look overall on the basis of various estimates. If the actual overall earning results being reported are generally in line with the optimistic expectations or exceeding expectations, it is a sign of an improving environment in the stock markets and for the business economy overall. When the overall earnings are perceived as disappointing during a given earnings season, it can have a chilling effect on the investors over the course of the next quarter or longer. My advice to the investors: don't over-leverage your trades. Keep strong risk management thresholds because sometimes the stocks might open at a gap during the earnings period. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to this channel. To understand your strategy during this earnings season, register for our weekly webinars and seminars on www.century.ae. My name is Yogesh and you have a great week ahead.